Hello everyone. This is the pre-market report video for today, 31st January 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, let's quickly discuss what happened yesterday. Here, if required, please pause and have a look. I compared the rate of change of Nifty and Reliance. As we see, both Nifty and Reliance opened positive, but from the morning itself, there was some pressure in Reliance. And it's kind of understandable. The stock is the largest market cap company in India, trading at all-time high value. More importantly, day before yesterday, it increased 7%. So, some level of profit booking was reasonable, especially when the US oil company and oil price dropped on the previous night means. Then, after 2 p.m., the selling in Reliance accelerated and dropped over 2.5%, which in turn dragged the Nifty down as well. Here, the result-related weakness in FMCG stocks, Bajaj Finance and L&T doesn't help either. So, that's why yesterday, Bank Nifty outperformed Nifty as it closed almost flat. I mean, one might argue Bank Nifty was very much volatile. Intraday high to intraday low, it was over 300 points and couple of times it moved 200 points up and down, etc. But I don't agree on that. 300 points is just 0.6%, so plus 0.3% up and minus 0.3% down move on the index is very common. So banks yesterday was just flat and the market was controlled and dragged down by Reliance and those result related stock weakness. They alone contributed for over 150 points in the total 200 points down. Now coming to the possible reason. In the last pre-market video, we discussed this in detail. The reason for oil-related company increase on Monday was mainly due to overall all over the world's major big oil companies rallied 3 to 7% on last Thursday and Friday. And for that, one of the main reason, or we can say the trigger point, was this cold weather warning in Europe, which in turn made all the oil exporting companies to rally. I mean, I didn't deny that. Both Middle East tension escalation and US government strategic reserve depletion did play their part. I accept those, but one of the main two beneficiaries of Europe's extreme cold weather is Reliance and ONGC. Since both these companies alone on the last December month exported 30% of their total Europe diesel import. Hence, when the Europe's Met Office issued the warning, these two stocks got benefited. Now about that. Yesterday, UK-based market intelligence company released the report based on ship tracking data. On January month, due to this Red Sea issue, the diesel export from India to Europe dropped 80% from month-on-month basis. I mean, on last December month, India exported around 3 lakhs barrels per day of diesel to Europe. That now, from that 3 lakhs barrels per day, expected to be just 30,000 to 60,000 barrels per day. So, in 1 month, around 80% diesel export drop to Europe. This is the classic example how the very big institution plays the small institution. Again, I'm not saying this was the 100% reason, since that 100% reason only knows to the person who sold the stocks. I'm just saying it just happened. I mean, last week, cold weather Europe's warning. Then on Saturday and Sunday, all Indian news websites did talked about the India's Europe export and ONGC's oil drilling starts in Arabian Sea. Then on Tuesday, suddenly one UK-based research company was releasing the report. Forget December month, it was the old story. For January month, India was not exporting to Europe. So this might be the more probable one of the reason for the Reliance last 2 days volatility. Moving on, sector-wise, except Realty and PSU Bank, all other index closed negative. Capital goods, FMCG, pharma and power down 0.5 to 1% each. Then about institution, slowly FII trade value was closing to the normal. I mean, from over 30,000 crore rupees last week, yesterday both gross bought and gross sales dropped around just 15,000 crore rupees, which is really good, much welcomed positive move. But on the negative side, they did net sold for 2,000 crore rupees. On the contrary, DIA net bought for 1,000 crore rupees. Then coming to US, all three US major index opened positive. Then at 10 a.m. Eastern Time, US Consumer Board released the Consumer Confidence data and Bureau of Labor Statistics released the number of job openings in US for December month. Surprisingly, both the data came as really good. I mean, US consumer confidence increased from 108 in December month to around 115 in January, which is massive increase, though it was marginally less compared to what analysts expected. Similarly, market expected the number of job openings to decrease gradual on monthly basis, but in contrast, the data came as over 9 million jobs vacancy, which is like over 2,50,000 jobs more than what analysts expected. So both the data are really good and it reduces the chance of rate cut in March month to below 40%, which in turn puts pressure on both S&P 500 and Nasdaq, especially Nasdaq, which was the one that got affected strongly as it was more sensitive to interest rate. Whereas Dow Jones and to some extent S&P 500 was saved by US banks as Morgan Stanley released the report that they are expecting Fed will relax the US banks' capital rules. In the end, Dow Jones alone increased 0.35%, whereas S&P 500 closed marginal negative and Nasdaq dropped 0.76%. Despite the volatility, US VIX dropped 2% and moved below 13.5 from above 13.5. Before going to the next topic, one more thing. Yesterday in US, in the aftermarket hours, Google, Microsoft and AMD, those three major companies released their earnings. Here, all of them beats the estimation. However, all of them got some negative statement like Google ad revenue was not good, which in turn made the Google stock to drop over 5% in the after offline market trading. Similarly, all the big tech stocks dropped 1 to 6%. So we can say the momentum is not good, more on the negative side, especially for tonight we got Fed interest rate decision and Fed chairman press conference. Anyway, next topic about oil and gold. No new news, but both of them increased. At the time of this video, WTI crude is trading around 78 US dollars per barrel, whereas Brent crude is at 82.5 US dollars per barrel. In case of gold, it trades at 2055 US dollars per ounce. Regarding ADR, in line with US market, both the banks closed positive, whereas both IT stocks closed negative. And surprisingly, today early morning, GIFT Nifty increased marginally at 3 AM Indian Standard Time. It closed at 21,672. Yesterday, the premium was 120 points. Again, this is another positive thing to note. Despite the negativity in yesterday Indian market, GIFT Nifty haven't erased its premium. I mean, either GIFT Nifty or Nifty Future for this present week, if their premium dropped below 80 points means, then it is the huge red flag. But yesterday, it was always above 100 points. So from that perspective, market is still not in the seller's control. Anyway, based on that 3 o'clock GIFT Nifty value, it's indicating 30 to 40 points gap up opening. As a summary, US market closed on a negative note, especially with this Google and AMD aftermarket share price crash, which was evident in IT ADR drop. But on the positive side, GIFT Nifty and Bank ADR indicating the positive opening. Similarly, TCS won a 15-year contract with Aviva. Analysts estimating the contract would be around 2 billion US dollars. So possibly TCS might trade positive despite the weakness in other IT stocks. Let's see. But it's a difficult ask when Google share price dropped 5%. Earnings wise, both L&T and Dr. Reddy's posted a better top line financials. Both revenue and net profit did beat the analyst estimation. But L&T raised some concerns in their future project status in Middle East due to the Red Sea disruption. Again, Dr. Reddy's case, their ADR dropped around 1%. Moving on, yesterday as per stock open interest, obviously Bajaj Finance, Bajaj Finserv, Bharat Electronics, ITC, L&T Mindtree, Bata India and Cipla got an increase in open interest along with a negative close, indicates the short build up. On the other hand, ZTV, Hindalco, BPCL, Hero MotoCorp and LIC Housing Finance got an increase in open interest with a positive price close, indicating the long build up. About the things to look out, Maruti Suzuki, Sun Pharma, Shree Cement, Bank of Baroda, Adani Wilmar, GMR Infra and Jubilant Footworks are some of the major Indian companies' earnings results are scheduled to release today. In terms of macro, before our market opening, lot of Japan related macros such as Bank of Japan statement, Japan's industrial production growth and China's manufacturing PMI data is due, which might influence the Asian market. And during our market hours at 12:30 p.m., UK's housing inflation and Germany's retail sales data is scheduled to release. Finally, after our market close, India-related infrastructure output is due and RBI is scheduled to release their review about Indian banks' credit. And for US, it's going to be an eventful day. First, private non-farm payroll data, then crude oil inventories report, and finally in the night, Fed's interest rate decision and Fed chairman's press conference are the important items we need to keep an eye out today. Coming to technical, Nifty opened on a positive note by 40 points gap up but failed to hold on to the gains, and throughout the day it extended its loss. Nifty has faced tough resistance around 21,750 mark, which coincides as 61.82% Fibonacci retracement level of the recent fall. And also here Nifty has failed to cross that level, and hence technically it kind of ends the counter trend rally. Thus on the daily chart it formed a long bearish candlestick which resembled a dark cloud cover pattern. In addition, both hourly and daily momentum indicators have a negative crossover, which is a sell signal. So all indicating a bearish reversal pattern and suggesting a bearish outlook in the near term. If Nifty fails to hold 21,500 in the coming sessions, it can drop to 21,300. On the higher side, 21,800 is expected to be a key hurdle. If Nifty manages to go past it, then it might move towards 22,000 in the short term. Hence, considering the upcoming budget event during the week, Nifty is likely to consolidate within the range 21,200 to 22,000 from a short term perspective, and a decisive close beyond this range is likely to result into trending moves in that direction. In case of Bank Nifty, unlike Nifty, it got mild selling pressure and closed 75 points lower compared to previous close. Thus, on the daily chart, it formed a bearish candlestick with upper and lower shadows, indicating the clear consolidation. For the last 2 days, Bank Nifty had been facing resistance at around 45,500. Thus, for a sustained move towards 46,000, it needs to convincingly break this 45,500 mark, which coincides with the highest call option open interest. Anyway, the immediate support on the downside is at 45,000, and a breach below will intensify the selling pressure and might push it to 44,700 to 44,500 levels. On the weekly options front, the maximum call option open interest was at 22,500 strike, followed by 21,700 and 22,000 strike, with meaningful new call option writing at 21,700 strike, then 21,800. Thus, from the options data, 21,700 to 21,800 as the resistance zone. On the put front, the maximum open interest was at 21,000 strike, followed by 21,500 and 20,500, with new put option writing at 20,700 strike, then 20,500 and 21,000. Hence, the immediate support is at 21,500 and then at 21,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.